Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. First of all, I would like to thank the organizer and for inviting me, giving me the opportunity to share some of the experience that we have in Malaysia with regards to the development of products in Islamic banking products in Malaysia. Thank you, Mr. Chairman, for introducing me to the session. Okay. As you know, Malaysia is one of the countries that offer Islamic banking products. We have a very vast experience since 1983. I have a very long slides here, but given the time that I have been given only about 20 minutes, I try to cover as brief as possible. But you can stop me at any time to ask questions. And also after the session, I think the chairman will be opening as well the session for question and answer. Okay, this basically is a disclaimer clause. All the opinions that have been expressed or shared here is basically from my own opinions. And also for this presentation, the material for this presentation I obtained from my colleagues from the Central Bank of Malaysia. So credit to the Office of Central Bank of Malaysia. This will be the outline of the presentation. I will be covering briefly on the overview of Islamic finance ecosystem. Then I will cover a bit on the product development process in Malaysia for Islamic banking products. And also, lastly, I will conclude with a bit of the recent development that taking place since this year and last year. Sorry, 2016 and 15. Okay, the journey of Islamic banking in Malaysia. As you know that we started actually the Islamic finance in 1969 with the introduction of Lembaga Tabung Haji. It's basically a Hajj fund for a Malaysian. They will put their money in this particular fund. It's a government-related companies, and this fund will be invested for many purposes in the various industry, namely the plantation, real estates, so that it will generate incomes. And this income will be shared with the depositors, and it is also to help the depositors to perform the Hajj. And then in 1983, we have the first Islamic bank in Malaysia, which is Bank Islam Malaysia Berhad. And also in 1983, the first banking act, Islamic Banking Act, was introduced. And subsequently, because of when you have a banking, you need a takaful, insurance arm. For example, like you have a mortgage, you need a insurance to cover the mortgage. So realizing that there is a gaps here, in 1984, the government established its Takaful Act 1984, and the first Takaful company was established in the same year. And in 1990, we have a first corporate sukuk issuance by Shell, Malaysia Berhad. And 1983, the first Islamic, the government allowed the banks, the conventional bank, to introduce a window, Islamic windows. At that particular time, they're being introduced as interest-free banking scheme in 1993, after 10 years of the introduction of first Islamic bank. Basically, the idea is to give more competitions to the bank, to the Islamic Bank Islam Malaysia Berhad, because being one player, you can't have a very good industry interaction. There is no challenge for the bank. So basically, in 1993, the government feels that the banking needs to be further pushed towards the next frontier. They introduced the Islamic interest-free banking scheme. And in 1994, because we have plenty of players, the first Islamic interbank money market was introduced in 1994. And then in 1996, given that more and more issues being cropped up from the industry, the government, mainly the Central Bank of Malaysia, feels that there is a need to have a centralized body of Sharia Advisory Council, and also the Securities Commission, and also in the subsequent year, in Bank Negara Malaysia in 1997. And in 2001, the first Financial Sector Master Plan and also Capital Market Master Plan was introduced, basically to chart further for the 10-year strategic plan on how the banking and also the capital market industry will be moving. And a section of it is looking into the Islamic banking and also capital market. And in 2002, it's another landmark progress in the industry where Malaysia hosts the Islamic Financial Services Board. And in 2006, when the government feels that Malaysia actually is ready to push their industry towards beyond the boundaries of country, means that to make it the Islamic banking of Malaysia to become more global, they introduced the Malaysia Islamic Financial Center. Basically, the idea is to promote Malaysia as a hub for Islamic finance. And in 2009, Bursa Suq Asila, basically it's a commodity trading platform to facilitate for commodity murabaha transaction. And in 2010, we have this International Islamic Liquidity Management Corporations. Okay, basically looking at this journey of Islamic finance in Malaysia, the role of regulators, the Central Bank of Malaysia, is not only confined to regulation and supervision. Basically, the mandate has been expanded a bit. We also have a developmental role here. First is, sorry. Okay, thank you. Okay, here we okay, basically, as you know, that a regulator, central bank is a regulator. We have the regulatory function here. We have also a supervisory function. And on top of that, we also play a very important role in developing the industry by extending the function as a developmental role here. Basically, the role is to formulate strategy initiative to institute a comprehensive financial infrastructure. And the recent development, in 2011, another financial sector blueprint has been introduced. And 2013 is another landmark. We issued another Islamic Financial Services Act in 2013. And in 2016, we have the investment economic platform. I will elaborate further on these two things later. Okay, basically, this is how Islamic finance in Malaysia has been developed. We have a very comprehensive ecosystem. We stress on the importance of institutional development. Second is on the legal Sharia regulations. Third, on the product and market. And lastly, we also have a very good or very serious in looking into the knowledge and education aspect of Islamic finance. Okay, basically, this slide basically to show that what is the current state of Islamic finance in Malaysia. For Islamic banking, in terms of the asset, it's about 27% now. Deposit is about 31%. Financing stood at 32%. Takaful, I would say the contribution is about 2 billion now. We have general takaful and also family takaful. And capital market, Malaysia has been known as a global leader in sukuk market. We have also the other equity market, like share market, mutual fund. So basically, the idea of Malaysia on developing Islamic finance is not only confined to banking. We have various products and services as well. I will talk a bit on reflecting the Sharia aspect in the Islamic Financial Services Act. This is the newest act being introduced in the 2013. Basically, this act is to give more emphasis on the Sharia aspect and also give more clarity in terms of the scope of business. In terms of scope of business, basically the Act has redefined the definition of Islamic banks intermediary, the differentiation between the Islamic deposit and also investment account. Because in the past, as you know, that the Islamic Banking Act 1983 is just talking about deposits. So they can use a mudarabah contract. You can use a wadi'ah or court contract to structure a deposit product. But after a year, we can see that this definition is having a problem in terms of to instill the understanding of what is mudarabah, the real mudarabah. Although it's being structured as a mudarabah, but the understanding of the customer down there is still like a normal deposit. They are expecting the same kind of returns. So knowing this fact that may pose a risk to the industry, the Central Bank of Malaysia have enacted a new act which redefines what is investment, what is deposit. Because in the old act, in 1983, we just have the definition of deposit. And knowing the nature of deposit must be guaranteed. So what happened in 2013, this act being introduced, we have a different sets of definition. What you mean by Islamic deposit basically is a principal guarantee. And we have a flexibility in withdrawals. And our applicable Sharia contract is mainly confined to safekeeping, the wadi'ah, murabaha, and also court. And for investment account, it's being defined as non-principal guaranteed, and the return must be based on the performance of the underlying asset, and the maturity and withdrawal is subject to the condition agreed at inception. And the applicable Sharia contract basically is a musyarakah, mudarabah, and also wakalah. Here, basically, when we define it in the act, in the law itself, so for all the Islamic bank, if they want to introduce a fund mobilizing product, they have to be very clear. It's whether you want to introduce it as a deposit or investment. You cannot have a definition of investment, but you have an underlying contract as a equity-based or a murabaha-based contract. Here to give more clarity in order to shape the industry towards the next frontier. Next is on another salient features in the Act is actually on the regulation framework developed based on the prudential and also to ensure Sharia compliance. Here, basically, this Act gives the power for the central bank to look into both aspects of financial stability. First is the objective is to preserve the sound Islamic financial system, and at the same time is also to preserve the sanctity of the Sharia contract. In this regard, the Act gives the power to the central bank to regulate on the various aspects, the protection of depositors and policyholders, and also to instill the public confidence, correct the market imperfection, and also problems of moral hazard. And at the same time, the Sharia conduct will be regulated under in order to achieve the understanding of the fundamental of the Sharia, appreciate the uniqueness of the contract, recognize the environment, and also acknowledge the challenges embedded in the contracts. And the final key features of the new Act actually is to give more guidance to the industry with regards to the Sharia governance. In the past, I think a few years before this Act being introduced in 2011, we have the Sharia governance framework guidelines being introduced. And in 2010, some of these elements in the guidelines has been incorporated in the Act to give more legal power to the central bank in regulating the Sharia governance. Now I move on to the product development process in Malaysia. And basically this slide is to show that it's a typical product development cycle. I think the previous presenter has discussed this thing at length. But just to recap, in Malaysia, I took this thing from the Bank Islam Malaysia Berhad. This is the way that being done there in that particular bank. Firstly, is the product conceptualization. They need to source for ideas, look for business and opportunity to develop a prototype, and also identify what are the key Sharia requirement with regards to develop this particular product. And then they will move on to the next stage on the R&D, and also look at the business and opportunity analysis, and conduct product development and also testing. And then when all this thing has been complied with, they will go to their board for specific approval, and also subsequently go to the stage of commercialization, launching it and advertising, and also to conduct a post-implementation review. They need to give some time, in fact, in being specified in the regulations itself, to conduct a review so that this product is really have a benefit to the industry. In terms of the governance aspect, first is the product development committee at the bank will do at the product. It will go to the Sharia supervision counselor, basically it's the Sharia officer of it, and they will present it into the risk committee to look comprehensively on what are kind of risks embedded to that particular product. Once everything is being cleared, they will go to their board of directors for approval, and subsequently all products shall go to central bank for approval. I will talk a bit more on the central bank's approval process here. Basically, in central bank, we introduced the guidelines on introduction of new products. So what happened? This guideline is applicable for both conventional and also Islamic. But what makes it different here with regards to the Sharia aspect, for example, like a new product you want to introduce, the chief risk officer of the bank needs to identify of the minor or major variances with regards to the existing approved product. If there is only minor variances identified, the bank can just launch it into the central bank, can launch it and also just file. But if the CRO identified that there are significant and also material differences with regards to the previous products, they need to file it to the central bank, and the central bank will do a very rigorous analysis and to identify what are the key Sharia issues, if there is any, and if there is any Sharia issues that requires it to be tabled to the National Sharia Board, the Sharia Advisory Council of Bankaları, this thing will be presented to the National Sharia Board, and it will be deliberated at length. And once being cleared by the National Sharia Board, and then we will give the approval to the banking players to be launched in the market. So the salient content of the guideline basically covers about product management program, product authorization. We also there is a requirement on ongoing monitoring and control. And there is a section on itself mentioning about the compliance with Sharia principle. And last but not least is about fair treatment to the customers. Means that the bank needs to come up with all the terms and reference, the product term sheets to the customer, so that the customer will have all the information for decision making. A bit more on the launch and file. What are the things that with regard to the Sharia that meets the criteria for the product to be launched and filed? Means that once the product has been approved by the board, they can launch it immediately, but at the same time they have to file it with the central bank. These are the criteria basically. The product, including the accompanying documentation, must be approved by the Financial Institution Sharia Committee. The product, underlying Sharia contract structure and features must be similar to the product that had been approved earlier by the National Sharia Advisory Council. And the product itself must be consistent with all Sharia Advisory Council resolutions. Basically, if the new product meets all these criteria, the bank can just launch it and at the same time file it with the central bank. But what falls under the file, approve, and launch category? Basically, I just extract on the relevant criteria here with regards to the Sharia requirement. First, if the product is involving innovative structure that have been introduced in the Malaysian market for the first time, means that this is a totally new product altogether. For example, like a structured product, means that it's not been introduced anywhere before in Malaysia, it shall go to the Sharia Advisory Council of Central Bank for further deliberation. The second is the Sharia compliant product that requires the resolution, product that involves application of new Sharia contract in Malaysian market, or if let's say there is a combination two or more products that were previously approved on the standalone basis. Then this product basically is like a new product altogether, because sometimes if the products have used a particular contract, it's fine from the Sharia angle, but when you combine 2 or 3 products, it may attract Sharia issues there. So this, for this kind of product, it requires to go to the Sharia Committee of Central Bank, so for the Central Bank to look if there is any issues with, they need to further deliberate. Last is on, I will share a bit on the latest development happening in Malaysia for the last 2 years. The first one is on investment account platform. Basically, this is the latest innovative, I would say, product offering for Malaysian market. As you can recall, in 2013, we introduced the new criteria for investment account. So, but there is an issue there. How Islamic Bank wants to introduce Islamic investment account, because it's totally new to the market. Although we have this kind of product be introduced before, but just because of the definition, if you can recall, the definition still fall under the deposit. But now, since it's considered as an investment, most of the banks reluctant to offer it. So what happened is a bit of the history of this platform. The central bank recognized there is an issue here. How to promote this product to the market. So the central bank became the catalyst of it, launch a project basically to have some sort like a crowdfunding platform. It's a platform on its own. It's an electronic platform. But it's not being owned by the central bank. The central bank has just initiated it, and they developed a prototype, and they put this project back to the industry, headed by the Association of Islamic Bank in Malaysia. And the industry discussed, so what happened at that particular time, selected banks showed their interest to participate in this platform, and they come up with I would say a prototype, industry-wide prototype, and they launched it last year, early last year. Now it's already 1 year now. So the idea is, the structure is how it works. If individual or investors wants to put their money in investment account, they can go to any of the participating Islamic bank. This platform is being owned by a consortium of banks. Now it's about 6 banks as an intermediary. Yeah. And for example, if this bank, the participating bank, will source for a project. If a project from the industry, they can find it any good potential project, they will conduct a very rigorous analysis, the feasibility of the project, and they will list this project into the platform. They will put as an advertisement, any of the banks. So this platform in the middle, they call investment account platform, will broadcast it to the public. So all the, and they have some information will be given there, the expected returns, the tenure, the nature of the project, what are the risks involved. And customer, when they, this project will be listed on the platform, the customers, the potential investor have all information, and they will make their own analysis. And if they're interested to participate in this project, they can just place their money to the participating banks that participate in this platform. Basically, this is a summary of it. So the applicable contract here is the musyarakah, mudarabah, and also wakalah. Yeah, you can see here from the interview, the Islamic bank will do their due diligence. They will conduct the stability analysis and also will do all the monitoring and reporting.
Can I ask a question?
Yeah.
About the platform? I missed out when did the platform launched by Vienna?
When has been the platform launched? What was the launch date?
Basically, Bank Negara is just the BNM is just introduced the project. We are
Introduced.
Not, yeah.
So no launch yet.
It's not, the launch is done by the industry.
All right.
This platform is owned by the industry,
Okay.
industry players.
But
Bank Negara, as you know, that one of the roles is developmental roles.
all right.
So in order to push the industry, and we have this kind of definition, new definition.
So the platform is working at the moment.
Yes, it's working. Yeah, it's only live.
So what is the total volume of the investments?
I would say in terms of the volume, and now right now it's still small. I think we have only a few projects.
Okay.
They're still on the testing mode to see the acceptance from the public. But they have the strategy direction to push further.
And what is introduced by Bank Negara, Malaysia? When was the platform introduced?
Last year.
Last year.
Yeah,
Okay.
in February 2016.
Okay.
It's
all
just
right.
1 year old now.
Okay. Thank you very
It's
much.
1 year,
Thank you.
This is the background. The platform being launched in February 2016 by the central bank governor. Is a multi-bank platform to facilitate investors to finance the viable ventures projects, and also it's a Sharia compliant venture requiring above. I think the requirement here for all projects above 500,000 ringgit Malaysia. This is for the start. I think once they are comfortable, they know what are the risks involved, what are the best practices available in the market. I think they will also explore to offer to other projects. Like, for example, perhaps a startup, which can also be part of it. But now I think they open just to the small and medium enterprise. And also offer to different type of size of business in various industries. And that is different tenor. So the fundraising process, the entrepreneur or the SME owner will submit a venture listing to the platform itself. And the bank will do the screening. Yeah, the bank will do the screening. And at the same time, we have the rating agency to be also as a player to do the rating. Because for all any investment, we need a rating agency to also conduct an independent analysis on the funding. And it will list on the platform itself. This is the logo of the platform. And from here, the investor will select whoever has the appetite to invest in this particular project will invest it through the platform. And the investor will give the returns, will be receiving returns from this. The platform currently being owned by 6 banks, namely Afin Islamic Bank, Bank Islam Malaysia Berhad, Bank Muamalat, Maybank Islamic, Bank Rakyat, and also the Bank Simpanan Nasional. This is a sample of first project being listed on the platform. The company names is, do you have the information on companies? Okay, there is a purpose of the financing, is for working capital, for a new transportation terminal in one of the districts in Malaysia. They want to raise about 10 million ringgit Malaysia, and the tenure is for 3 years. And this project actually being brought by Bank Muamalat, one of the players. The first project, they managed to raise the 10 million within 2 weeks. When they reach the limit, the required amount, they will close. Basically, what are the key success factors that attracts investor for this particular project is because of the returns. It offers about 6.5 expected returns, which is above the normal deposit rate. And also the IEP infrastructure enhance the confidence of the investor because all this project has been assessed by the bank, which have all the skills and the competency. And on top of that, because of the independent rating by the rating agency, the local rating agency, it had enhanced the confidence of investors. And all the detailed documents is available in the website of the platform. Okay, in terms of the value creation, I think the investor will have another avenue to get attractive returns. It's a new asset class altogether. Entrepreneur also, instead of sourcing to the banks directly, they can get other source of funding directly from the investors. And also Islamic bank is another product offering. They can earn their returns instead of just a normal fee base and also profit base. This is another fee based income based on the sharing aspect or the commission that you receive by conducting the analysis. In terms of the risk, it's very minimal to the bank because all the credit and market risk will be borne by the investors. Okay, basically these are the main features of the. Okay, in terms of how the Malaysian industry wants to position this platform, currently it's still at the phase 1. It's a pilot project, only being participated by 6 banks. And moving on in this, once this platform is, would say, stabilized, they will offer to the industry for adoption in phase 2. And they also going to have it as an international, offer it to the international investors as well in the phase 3. Okay, this is basically the sponsors for the IEP. And I will touch a bit on the Sharia standards. As you know that in 2013, because of the new act, the central bank is allowed to issue Sharia standards as well. The main objective of developing the Sharia standard is to promote transparency and consistency of Sharia contracts, enhance certainty and strengthen the Sharia compliance, and also as a key reference to boost the industry towards the next frontier with regards to the Sharia aspect. This is the process involved in the development of the Sharia standard. The first stage being done by, the research being done by ISRA and also the Central Bank of Malaysia. And then they issue the exposure draft to the industry. We compile the feedback, and the Central Bank Sharia Advisory Council established a subcommittee so that the committee will have a very thorough research on all the findings and also the feedback. And all the issues, contentious issues will be tabled again to the full board of the Sharia Advisory Council. And it will go to the editorial, another silent reading by selected readers, and another final endorsement by the National Sharia Council, and the issuance of the standards together with the operational standards. Okay, this is the same thing, the process. Okay, what's this is one of the standards. Okay, I have one slide I need to show. There are two major components with regards to the standards. The first one is looking at the Sharia aspect, means that the requirement of the Sharia. They have the definition, what's the essential conditions, optional features, arrangement of the contract, etc., etc. But the second component with regards to the standard, the central bank also specify on the operational requirements, means that how to operationalize the standard, the Sharia standard. They have the governance aspect, the structure and also the documentation. It also touch on the risk management, and last but not least, the disclosure and the business conduct with regards to the standards. And at this juncture, we have issued 12 standards altogether available to the market, and industry right at the moment is adjusting because they need to reassess back all their products in order to ensure that all the products that are being offered is consistent with the standards being issued. They have given the grace period for them to comply. These are the, I will go through very quickly just to give a flavor. One of the example, for example, the Sharia aspect on the istisna, we have the definition. We also, the standard also talk about the process flow. The essential features, for example, like it covers the contracting parties, the asset, the price, work, delivery, and also we have the optional practices. For example, like forward lease agreement, istisna with wakalah, kafalah. So the standards talk a bit more on the practices. With regards to the operational requirement, we have the governance, we have the structuring, we have the risk management. It talks a bit on the risk management, the market conduct, and also disclosure. Basically, the idea of having this all the standard is to give more guidance to the industry so that all the product is being in line with the Sharia, and also the operational requirement also in line with the Sharia to safeguard not only the Sharia sanctity, also the financial stability. It's the details of it. Okay, by that I end my presentation. Thank you.
First of all, thank you very much. Finished just on time. And frankly speaking, I am very happy to have this presentation, because personally, in this business, I also believe that for Islamic finance, it is difficult to develop based on deposit collecting business model, and for several reasons. And investment and development banking type of activities, our business model is much superior, and it gives much more opportunity for product development. And I am very happy to hear that this initiative for investment account in Malaysia. But I have a couple of questions to Dr. Shaymi. First of all, not working?
Yeah, not working.
Okay.
Yeah, okay.
Okay. First of all, investment account, is it open to other Muslims in other countries? Do you need to be Malaysian citizen to be able to get involved in this? And second, do you have any fixed investment opportunities, like US dollar investment opportunities with this account? With this
Okay, thank you, Mr. Chairman. With regards to the first question on the whether it's open to the Muslim and non-Muslim and also non-Malaysian, I would say. I think I would like to answer the second one first. I think for the non-Malaysian, yes, it's still open as long as the person is residing in Malaysia. It means that they have a Ringgit Malaysia account in that regard. And also for the non-Muslim, yes, this investment opportunity is not only confined to the Muslim, it's open to any of the investors, the potential investors that are willing to take the risk of investment. And I think I have been mentioned earlier in that particular my slide just now. Once this platform has stabilized, the idea is to open up for a non-Ringgit Malaysia as well account. Means that it's offered to the foreign investors, but it's much at the later stage, not in this near future.
The reason I ask this question is because, like, as a Muslim, concerned Muslims, let's assume you live in a country and you are not happy with the Islamic banks' practices in your country, and perhaps this may give an opportunity to explore this opportunity, Sharia-compliant investment opportunity in another country. I think this will be a kind of a very important point. And I couldn't get about this. Do you need to make Ringgit investment, or can you make US dollar? Like,
I think at the later stage, I believe that they will also offer the non-Ringgit investment opportunity as well. Because even now, the regulation allows for the banks to offer non-Ringgit accounts. So I don't foresee that there will be a restriction for this particular platform to not offer non-Ringgit. Yeah, but I think at this moment, they are still finding their footing in order to stabilize this platform, to really understand, because it's like a new venture altogether for the banking industry. It's not being practiced anywhere in the world, I believe. Even in the Malaysian industry, as you can see, it's only 6 banks willing to participate at the initial stage. I think because of it's something new. Commercial banks, just like a normal loan. Even as you know that we have been discussing for the last 2 days, even when we talk about Islamic bank, still the Islamic bankers more comfortable to offer product that have a characteristic and features of loans. So this, to have to offer something on investment, definitely is something new to them. They need to really understand the risk. They need to understand what are the challenges that they're going to face. And I think once all this issue has been really identified, I think bit by bit, they will allow it for non-Ringgit account and also for for other international investors to invest.
Any question from the floor? Okay, thank you very much, Dr. Shaymi. It was very great pleasure to have this presentation and recent development. Frankly speaking, what you explained, it was also my dream. I wanted to see some kind of this type of development in Islamic finance. I'm very happy to see the details, heard of it, but it was great. And now, after Malaysia experience, I would like to introduce and give the floor to Mr. Mustafa DERECİ to give us a little bit more information about what's going on in Turkey and what's the prospect.
Thank you for introduction. Assalamu alaikum once again. Bismillahirrahmanirrahim. You will end up with me, and I would like to enjoy the disadvantage of being the last speaker of the day. I'll try to keep it short because I know that it is very hard to carry out, a conversation at this time. Okay, basically today I'm going to talk about the country case. Since this is the country case, I will talk about the Turkish Islamic banking. Okay. Bu. Okay, thank you. After the short training of this, my agenda is like this. I will try to keep it a bit short due to time constraint. First, I will talk about the adventure of Islamic banking in Turkey, and I will show you the current indicators and financials of Islamic banking sector as a whole in total, very shortly. And I will present you the strategy of Islamic banking sector in Turkey 10 years from now, where we are now and where we will be 10 years from now. Okay, this is the strategy of Islamic banking. And I will talk about the products and services we have now, and lastly, products and services in the wish list, which is we will try to develop in a short period of time. Okay, the Turkish banking system comprises three components. One is commercial banking, here. Today we have 34 commercial and deposit banks. And investment development banks, we have 13, and lastly, participation banks in Turkey, we have 5. 3 of them are private and 2 of them are public participation banks. By the way, participation banks interchangeably can be used for Islamic banks. Okay, this is very complicated maybe, but I will summarize it. It's the history of Islamic banking in Turkey. I would like to show you this. Generally, people start Islamic banking in Turkey in 1983, whereby a governmental decree for the establishment and the operation of special finance houses was passed in the Parliament of Turkey. Actually, in my opinion, the history of Islamic banking in Turkey started in 1975, whereby Turkey was the founder member of the first Islamic bank in Turkey, in the world, which is Islamic Development Bank. Okay, so this is the starting point for Turkey. Then in 1983, the regulation was passed, and in 1985, Al-Baraka and Faisal Finance. In 1989, Kuveyt Türk. 1991, Anadolu Finance, İhlas Finance in 95, and Bank Asia in 96. They were established. And one of the turning point of Islamic banking in Turkey is about the regulation. Before 1999, Islamic banks were not under the umbrella of banking law, but after this date, it became under the umbrella of Turkish banking law, which is very advantageous for the Islamic banks. Okay, then another one, bad days arrived and Ihlas Finance liquidated, bankrupted. Then, you know, in recent years, Bank Asia was also liquidated, actually transferred to the deposit insurance fund and liquidated. By the way, I would like to tell you something. Ihlas Finance liquidated in 2001, just after the crisis. And people then questioned the capability of Islamic banking. Why an Islamic bank can bankrupt or liquidate it? Actually, Islamic banks are the corporations, institutions, companies. They have the right to bankrupt. They have the right to be liquidated. Liquidation, you know, is a management issue, you know. If I am not a good driver and you gave me, you know, a Mercedes, very luxury car, and I crash with him, so it's not the fault. It's not the fault of the Mercedes, the car. It's my mistake. So Islamic banks can also be bankrupted. Another turning point is the sukuk in Turkey in 2012. The first sovereign sukuk was issued, and in 2015, another turning point is the government's interest in Islamic banking, and the first public entity of Islamic bank, which is Ziraat Participation Bank, was established, and after 1 year, another one, which is Vakıf Participation Bank, another state-owned Islamic bank, was established, and we are continuing to grow. Our number of staff is that sum, around 15,000, and it comprises around 7% of the market, which is high. It means that we are growing, you know. We are growing more rapidly than the conventional banks, and branch network of Islamic banks are growing much more rapidly than the conventional banks, and it is around 8% of the total banking sector in Turkey. Okay, let's continue. These are some of other indicators. Capital adequacy ratio is at the market level. You know, this is participation bank and banking sector, a comparative analysis. NPL is, okay, up to the market level. And the efficiency ratios are worse than the commercial banks, we should admit, and we should solve in any way. What is it? Net profit per staff is $28,000, whereas in commercial banks it's 63. You know, deposit per branch is 25 million in Islamic banking sector. It's 34 in commercial banking sector. And credit per branch 25 in Islamic banking, 42 million in other banks. Okay. But what is our strategy and our vision? This is the picture of today. Of course, time is going, and where we will be in a short period of time, I mean, after 10 years, after 5 years, where we will be. This is the strategy and the vision of the Islamic banking in Turkey. There is a strategy document of Participation Banks Association, which was conducted in 2014. According to this strategy documents, commercial banking sector is expected to have 15% of the market share by the year 2025. It's a bit challenging, you know, because today market share is around 5%, less than 5%. In order to reach that share, Islamic banks must generate around 300 billion American dollars of assets, which is really difficult. It is stretching but attainable. Okay. There is another strategy. This strategy is in line with the government strategy to make Istanbul one of the centers of Islamic finance in the world. Okay, Islamic finance and conventional financial center. Today, it is generally accepted that there are three main Islamic banking sectors, Islamic banking centers in the world. One is in UK, London. Another is GCC countries, the Gulf. Another is Malaysia, the country of Shaymi. And but after 5 years, according to the plan of the government, Istanbul is expected to be one of the centers of Islamic finance by the year 2023. Okay, the red one. And Pakistan probably will be another Islamic banking sector center, and Indonesia probably will be the other. In a long run, Nigeria or Kenya in sub-Saharan Africa will be a Islamic banking sector in Africa. Let's look at the products and services we have in Turkey among the Islamic banks. According to this is my classification. There may be many other types of classifications, but this is my classification. Islamic banks, products and services can be classified under, these are 6 categories. The most important one is fund collection. We call it fund collection, not deposit, just to separate it from the conventional terminology. Fund collection. We do not say credit, but we say fund utilization, because we are utilizing fund. We are not giving credit. And we have investment products, treasury-related products, trade-related products, and payment system related products and services. Let's look at these very shortly. For fund collection side, we have current account and PLS accounts, profit and loss sharing accounts. These are the main products we have on the liability side of the balance sheet. Current products consists of 15% of the total assets of a typical Islamic bank in Turkey on the balance sheet. 15%. PLS accounts around 60% of the asset. Sorry, this is not asset, these are liability side, sorry. 15% plus 60%, totally 75%. And remaining part of the liability is the equity, subordinated loans, other international borrowings, etc., etc. The current account is based on card, This Sharia issues discussed many times yesterday and today, of course, otherwise, I should repeat maybe 6th time. But better than me. PLS accounts, they are based on mudaraba, not vekale, mudaraba for the time being, because vekala issue, Vekala method is not accepted by law as a method of fund collection. But good news, there is a draft of Islamic banking in BDDK, I mean Banking Regulatory Agency, and it is expected to be accepted and passed in the Assembly this year, inshallah. And Wakala structure is there, you know, is accepted as a method of fund collection. Tawarruk is here. Tawarruk is something I don't like at all. Probably you don't like. But Tawarruk is, I resemble Tawarruk, you know, there is cortisone, you know cortisone pill. It is the remedy for everything. You know, if you have skin disease, the doctor prescribes cortisone. If you have neuropathic disease, cortisone again. If you have something else, cortisone. Cortisone is, you know, the magic pill. Magic pill. But nobody wants to take it due to its negative side effects. Tawarruk is something like this. We may use it as a last resort, as a last option, not as a routine product and service, like, you know, having a medical operation, last resort, last chance. But unfortunately, Tawarruk is used everywhere. My colleague Habib said yesterday that there is a Gresham law in economy. Bad money drives out good money. You know, Tawarruk, if Tawarruk is in the market, it drives out all other products and services, because this is very easy and you can use it everywhere, anytime, you know. But it's a controversial issue. There are so many debates on it here in Turkey. But unfortunately, in the Gulf region and Malaysia, Tawarruk is very, very widely used as a routine product. Even they said, because a few weeks ago we were in Kuveyt meeting with guys from Malaysia and Indonesia, other countries. They said 90% of the fund utilization, in some countries 95% of fund utilization are based on Tawarruk, you know. So Gresham law is now here in practice. It drives out everything. Tawarruk is there, nothing else. We have in Turkey, Tawarruk, we do not use Tawarruk in Turkey for fund collection, but for some interbank transactions, Treasury Department, International Department can use it, not for individual and retail customers at all. We have special fund pool. This is very Sharia compliant product. It is, you know, rather than using pool, let's say there is a, you know, good project and you invite investors to invest in this project one-to-one. So you match the investors and the project one-to-one. So the investors take the risk of the project, so it must be very well analyzed and feasible and viable, because they take the risk of the project itself. The return is high, but the risk is higher compared to the conventional deposit structure. Wakala we have, but we do not use it because Wakala structure, as I said, is not legal for individual customers, but, you know, inshallah it will pass in the new draft of banking law. We do not have savings account. Savings account is what? It is the account whereby you can deposit money and withdraw money anytime, in any time, but the profit is calculated at the end of the year, once a year, out of the average balance of the account itself. It is not yet defined as a legal framework by law. Again, we are expecting this to be accepted in the new draft of the law. We have mortgage finance and car finance. You know, these are very common issues. But in Turkey, we are using mortgage finance with the structure of murabaha. Unfortunately, in Turkey, 90% of the assets or fund utilization are murabaha. 90%, 95. Remaining 10% is, you know, ijara, musharaka is very few, mudaraba very few. There are some salam and istisna acts there, but the overwhelming majority of the transactions are murabaha. Again, we use in car finance transaction, we use murabaha and ijara as well. We can use, but the majority is murabaha. And retail finance, trade finance is for commercial, SME and corporate customers, trade finance. And commercial SME finance, you know, these are actually the same based on murabaha and ijara generally, but to some extent istisna and salam is used for commercial and SME finance, for construction and housing, building housing, etc. We have gold-based funding. It is new. I mean, you know, gold and precious metals are new source of funding in the banking sector in Turkey, and it is widely used for in Islamic banks generally. If you have gold, of course, you do not want to keep it in the safe boxes. You have to use it to generate money out of it. So you have to find ways how to use the gold under your custody. Gold transactions must be on the spot. This is act sarf. So gold-based funding is very problematic. You can give gold to somebody, let's say 100 gram, but if you take 101 gram, this 1 gram is interest. So we developed swap-like mechanism to utilize this gold in such a way, if the jewelries or, you know, the guys who is in the business of gold, you know, gold mining or jewelry, etc., we give them, let's say 1 kilo of gold, pure gold, and they deposit us Turkish lira or dollar or euro or something, but in current accounts. They use in a you know, certain period of time. We use their money and generate money for ourselves. They use our gold and generate money for themselves. This is a swap, exchange of deposit issue, you know. Okay, we have project finance. Project finance, you know, they are big projects, generally mining and construction and highways, bridges, etc. These are very, we use here international commodity murabaha. Again, it is based on tawarruk, unfortunately. And there is tawarruk for fund utilization. As I said, it may be used everywhere. It's in the deposit side, now it's here, and it may be any other place. Investment products, the most important and the popular one is the sukuk. In Turkey, the ijara sukuk is very popular. It is the most Sharia compliant one, and it is tradable. The other ones are not tradable. But the problem is, since ijara, I mean financial leasing, operational leasing, is not very popular, we are lack of underlying asset in order to develop sukuk on it. This is the dilemma we have. Again, for investment product, we have special fund pool I mentioned before. We have commodity murabaha for, this is not for individual customers, but we use it because since commodity murabaha is based on tawarruk, we use it for if customer in a their position, difficult position, generally for commercial and corporate customers, not individual customers. We use commodity muraba. We carry out commodity murabaha in London Metal Exchange on palladium and platinum, which are considered in Islamic law as a metal, whereas silver and gold is considered as money and it's not easily tradable. We have participation index. Actually, index means, one number. It's participation index is the box of Sharia compliant stocks in the Borsa Istanbul. It is revised regularly, once a year, twice a year, I don't know. Participation index. The criteria are set by the Sharia scholars, and it means that these are Sharia compliant stocks that you can invest. So there are some investment funds based on participation index plus sukuk plus gold plus FX. And we have tawarruk for short-term investment. This is done by the Treasury Department for international or interbank transaction for and with Central Bank of Turkey for short-term liquidity management issue. Okay, short-term liquidity management, and we have investment funds, as I said. As treasury product, we have forward. Forward is very famous, It is for hedging only and only, not for speculation. We do not allow our customers to use Forex for speculation. We only accept customers, whose line of business is related to FX, such as, importers, exporters, international traders, etc. They use FX and they need to hedge their position in any way. We only allow them to use forward. Forex is there, there are so many limitations on it. For sophisticated and private customers, it's a treasury product for very, very limited number of customers. And we have precious metals. Other than gold, we have platinum, we have silver, and semi-precious metals. We have copper and aluminum. These are again for the sophisticated customers. FX buy and sell, easy to understand. For trade product, we have, this letter of credits. These are related to payments and guarantee, and Exim Bank credits and financing export. These are related to trade finance for trading customers. I will not go into detail due to time constraints. And for payment system products, of course, we have charge cards, credit cards, installment cards, POS services, and ATM cash advance service. All of them, have underlying Sharia structure, that we should tackle. For example, in ATM cash advance services, we use Card Hasan because otherwise it is not Sharia compliant. Out of credit card, which is there is a certain limit because it is costly for the bank and you're not getting anything out of it. This is card, you gave 100 lira, you take 100 lira at the end of the month. But of course we can develop something more than this. Wish list. Commodity muraba issue is a problematic one. It is widely used by Islamic banks in Turkey. But we are using London Metal Exchange and some agents there and paying penny to them. Millions of liras are paid every year to the agents in London. And there are Sharia issues there. there is not enough commodity in London Metal Exchange, let's say palladium and platinum, but the turnover is huge, maybe 10 times and 100 times of transactions are made. However, the real physical amount of commodity is very low. So it creates some questions about the acceptability and Sharia compliance of the commodity murabaha. To solve this problem, what we are studying on something, sukuk-based commodity murabaha, which will be operated in Borsa Istanbul here in Turkey. Instead of using platinum and palladium in London, we will use sukuk in Turkey. So no fee and charge will be paid outside of Turkey. Still we are working on this. This is a wish list. And wheat-based commodity murabaha, it's another issue that we're still studying on. Wheat certificate. In Bursa there is, the market of wheat and the commodity is very standardized, and there is what we call licensed warehousing. Okay, wheat is there, licensed, standard, and out of the wheat there is certificate which represents the wheat, and you can easily trade it, buy and sell it. However, here there is a problem. The custody fee is a problem because there is physical wheat and it is, under the custody of an agent, and you have to pay money. It makes it a bit costly. Vekala-based fund collection, again, it is in our wish list. Diminishing musharaka is in our wish list. In some countries, we have a subsidy in Germany. They are using diminishing musharaka for mortgage credits. Okay, why? Because there it is easy and the legal structure is very simple. You can establish a company in a few hours, and because in diminishing musharaka, the bank and the customer are, partners. They establish a company. Company means not a big corporation. It is related to this project company. And as customer pays the installment, the share of the bank decreases and the share of the customer increases. And at the end of maturity, the ownership totally transferred to the other party, which is the customer. It is something good. Promoting musharaka and mudaraba, this is our headache, As I said, 90% of our balance sheet is murabaha. So the reason of being, raison d'être in the terminology, the reason of being of Islamic banks is using musharaka and mudaraba. However, it is the least used products and service or the method, unfortunately. And real estate certificates is a new product that we can use so there is no good example in Turkey, but real estate certificate is something like this. There is a real estate project, and the project is divided into square meters. 1 square meter, 1 square meter. Every 1 square meter there is a paper issued. So you can buy it and trade it. And at the end, whenever the project is completed, it is sold by the contractor, and the money is distributed to the stockholders according to the paper they have, the bond, the certificate they have. So these certificates are tradable, and it will be traded and listed in Borsa Istanbul. And acting as angel investors is another issue, because Islamic banks can act as angel investors, especially for fintech projects. There are so many fintech startup projects in Turkey, in the world, and it will based on musharaka. Mudaraba maybe, but musharaka is a better method. You know, this is a long-term investment, I know. Generally in Turkey, banks and the Islamic banks refrain themselves from long-term investment. There is a logic behind it because the cost, the fund that is utilized for long-term investment has the maturity of 3 months, with the average maturity of deposit is 3 months, and you will fund any startup for 10 years with this source of funding. So there is a big gap, maturity gap between liability and asset. That's why generally they keep away from long-term investments. Oh, okay, thank you. This is my presentation. Thank you for your time and patience. Do you have any question?
Yes, I get this one maybe.
Okay.
Thank you very much, Mr. Mustafa. We really appreciate, we enjoyed. And indeed today we are very lucky because we had 2 panelists. The first one and 2 both of subjects, but they really developed on was very important subject in Islamic finance. Number 1 was related to collecting money, resource mobilization for investment from the customers, and we really have seen very good example from the Malaysia investment account. And the second one, Mr. Mustafa, he particularly revolved around the issues related to liquidity management for Islamic banks and issue of tawarruk, which is very, very important in Islamic finance. Basically, anyone who are in this business appreciate these 2 important and problematic issues in Islamic finance, which indeed hinders the development of Islamic finance. So, given that, I would like to open the floor for the questions. If nobody has questions, I have a couple of questions. Any questions, please?
Yes, I would like to ask Mr. Mustafa about the gold swap products with currency. So when you have a client who would like to basically, I understand that you have a reserve of gold, or you buy a reserve of gold and you keep a stock of that, and then when a client, a gold or goldsmith or a jewelry person would like to take some of that gold, he will deposit cash and then you give him the gold. What rate you give on that basis? Do you actually use the local rate? For example, when he deposit with you, so do you say that's actually today the gram, each gold gram is basically 200 liras, and then you take money as much as equivalent of that? And is there any difference from the local rate, or you fix the rate, or when the deposit is finished and you're swapping back, do you actually charge different rates, or the same amount has to be returned?
Actually, we do not apply any rate because we use physical gold. We gave gold to the goldsmith, as you say, in gram or kilogram or something, and we take it again in kilogram. Right?
He has to give you cash instead.
They gave us cash, so the exchange of cash, and it's not 1-to-1. The rate when it is applied at the time of giving gold and taking money, the rate, any rate can be applied. Actually, the rate is not 1-to-1. Generally, we take 1-to-2, 1-to-1.5. Let's say I give you gold equivalent to $1,000, but you gave me 1,500 cash. Okay, it's not 1-to-1. So at the end of maturity or the agreed upon date, you gave me the gold back to me, and I give you your money back.
So technically, you will be able to benefit
more
more than the goldsmith.
Definitely, there is no other ways to use gold. this is the innovative way of using gold, you know. Actually, it is not a swap transaction in the, you know, swap market or something. This is exchange of deposit, we call it, okay?
That's fine. I'm just trying to understand the need we are fulfilling in the market. Is this something that's actually the goldsmith would actually appreciate? Do they actually find it interesting for them to actually to utilize an extra additional 1 or 2 gold, you know, and then return it back to you after a month or 2 or 3?
These are the only businesses who are interested in gold, in physical gold bullion, because they melted down the gold and, you know, they turn it into jewelry, bracelet, necklace, etc. They sell it, they generate money out of it, and at the end of the day, you know, they gave us the gold bullion again, you know, 1 kilo, 10 kilos or something.
So he might be looking at the differences in the market prices. So when the market is down, he might take from you, and then when, you know, basically the market up, maybe he will give it back.
No, not the market prices. You know, they are turning gold bullion into the jewelry. Their workmanship on it. For example, 100 gram of gold bullion, let's say, is 1,000 lira. However, if you turn it into bracelet or necklace, it becomes, you know, 3,000 or something. You know, there is workmanship on it, and they generate money out of the, you know, this craftsmanship on it, not the margin or FX margin or something. It has nothing to do with the margins and the price or something, right?
Thank you. Any further questions?
Do you think special fund pools can be promoted because they are the main source of the musharaka and the mudaraba?
Definitely, it's one of the best products that we should promote. Actually, we started to use it in my bank since 2004. But there are some difficulties. The difficulty is there is a project, a concrete project, and there are investors, and you have to promote. You have to make there is no guarantee. They take the risk as a whole, but at the end of the day, the return out of special fund pool sometimes, you know, is 2x or 3x of the profit that we distributed in the deposit accounts. It is based on musharaka and mudaraba. Good. I think it needs to be promoted for a while because it's long term. People generally do not want to invest their money in long-term investments and projects. This is one of the dilemma of it.
Legislation is sufficient?
Legislation is okay. You know, it's a matter of demand from the customers. There is no good demand from the customer or investor side. It is long-term investment.
I also have a question.
Me?
I have it. Related to your wish list, particularly I really appreciated your mention of possibility of using electronic warehouse receipts, and which I believe in due course it will be feasible. I believe in it if we can get into the financing of agricultural, you know, the farmers especially. But also your suggestion for sukuk was very important. But on both of cases, I have my reservation. I want to ask you a question. And first, in the first case, are we going to the plan is to use the electronic warehouse receipt to finance the farmers and make the money, and in case of change in position, to liquidate your position, or it is just to replace this with the tawarruk, you know, similar to bayal ina, you know, giving what you own and get it back. And same holds for the sukuk case. Is it will be an investment sukuk, or is it going to be a kind of a sukuk which is Sharia point of view questionable, unfortunately, most of them?
Tavarruk.
And, thank you very much.
Okay. For the warrant issue, still we're using it as a collateral to fund for agricultural credits, not only for investment or, you know, using it for sukuk or tawarruk, etc. It is not our intention. We will try to use it for trading, okay, buying and selling and funding the agricultural firms and agricultural, you know, traders, etc. So we do not want to use tawarruk issue. We have to find another way. Instead, we should use murabaha and other methods of financing, not the tawarruk.
Thank you very much. If there is no further questions, let's have an applause to the panelists and close the session. Thank you. Thank you very much.